This is like the 20th take. Oh goodness, whatever. Hello, this is Bianca with Sparks Enterprise. Here's our information. Email is info@sparksenterprise.org. Oh my God, that ain't even an email. I'm gonna edit this real quick. I'm not redoing this video. Info. Okay, better. Our email is info@sparksenterprise.org. My phone number is 903-749-4591. Okay, so today I'm going to talk to you about what is a refund. Now, a refund is typically when you pay more money during the year than what you actually owe. Another way of saying it, federal taxes are the money you owe the federal government each year. The most common of is, or you can read that. Okay, so the government collects money throughout the year by withdrawing it from your paycheck. Your jobs, they pay that money in. So a lot of people that come to me and they say, B, how do I fill out my W-4? Or how do I know what to allow them to withhold? Are they withholding enough money? And my answer is simple. Hey, do you want more of your check? Or you want less of your check? If you want more of your check, just put a lot of exemptions on there. They'll pay that no mind. Okay, so here's the thing. You can put as many exemptions as you want on there. At the end of the year, when January, February come at the beginning of the new tax year, whatever you owe, you're gonna have to pay it regardless. Uncle Sam is gonna get his money. Okay, so I'm gonna give you a good example. So let's just say your job that you work at, you they take out $100. I'm just using 100 for just a good number. So they take out $100 every pay period. You get paid every 2 weeks. So it's 26 bi-weekly pay periods because it's 52 weeks in a year. Okay, so that's 26 times 100. So that's $2,600. At the end of the year, whenever you get ready to file your taxes, the amount of money off the money that you made minus your standard deduction or your itemized deduction, um, you will be taxed on that money. So whatever that amount is, um, they'll use your money, that $2,600 that I told you about. During that year, they take the $2,600. I refuse to redo this again. They take that $2,600 and they put it into like a little safe deposit box for you. So remember, every time they withhold that $100, it's going into this little box. See the box, y'all? Okay. So what they do at the end of the year when you get ready to file, beginning of the year, you will you have your $2,600. It said federal withholding on your 1040. So you have your $2,600. So you got your 2,600. Come to find out, off the money that you made, you only should have really paid in $1,000. So they'll subtract that $1,000 that you should have paid in, and they're gonna your refund $1,600. $1,600 is your money out of your safe deposit box that you had left after you paid your taxes in that you owe for the year. Now, another thing to take into consideration is going to be the earned income credit. Now, for those that are single, you do qualify for the earned income credit. You do not have to have dependents to qualify for the earned income credit. We're going to go into detail about that. Let me see. I'll prep some stuff up over here. So, of course, I'm going to show it to you. Okay, first of all, single. Whenever you got that filing status, a lot of people will say, well, I should be at a household. You got any dependents on your tax return? Or do are you claiming anybody? And it doesn't have to be a child that you claim. It could just be anybody as long as they're in your household and you're taking care of the household. Then you can file head of household. But in the meantime, if it's just you on that 1040 easy, or just your regular 1040, depending on what forms you file, you're single. Just put single. And matter of fact, there's no other option for you to put anything else other than single if it's just you on that tax return. Okay, of course, we already know what married filing jointly is. That's just married couples filing together one tax return. Now, married filing separate, it does have some cons to it. You're not eligible for the earned income credit, and I'm not sure what else you're not eligible for. But for one fact, for sure, no earned income credit. Mm. The standard deduction is $12,550 for the 2021 tax year if you file single. Okay, so I'm gonna talk just a little bit about that. So at the end of the year, whenever you get ready to file, I don't know why I keep saying "in." Whenever you get ready to file, you have a cap. So if you make 20,000 and you're single, they'll deduct that 12,550 from your amount, and then that other amount you'll be taxed. Okay, and then your tax amount is how you determine how much you actually owe Uncle Sam, and you'll subtract that from your safe deposit box. And whatever money you got left in that safe deposit box after you pay Uncle Sam back, you'll get that back. Now, we're going to talk about this earned income credit. And we're only going to talk about the earned income credit just for single people or single taxpayers. And I'll get into the earned income credit because it's nice. I'll talk about it on another video. Okay. All right. Okay. You can go to the IRS page and it go to the earned income tax credit. It tells you like who qualifies for the earned income credit. And then they also have this little tool where you can check to see if you qualify. And tells you how to claim this credit, tells you some errors, okay. And then what to do, we audit you. What to do, we deny your claim, okay, I like. And anyways, you can read all of this stuff. This stuff is available at irs.gov. I already clicked on my little tab. So here's the max for the earned income credit for a single person, no qualifying children. It's $1,502. And I also, let me check something out too. And I also got the table up, and I'm getting all this information from the IRS website. Okay. Okay, so to begin, if you make at least $1.50 for the year and you're single, your earned income credit is $4. That's how much you'll get back, in addition to the money that you overpaid the IRS. All right, so we're going to start going down a little bit. Okay, here we go right here. If you made between $6,550 and $6,600, your earned income credit is going to be $1,006. So that's going to be an extra $1,000 that you get. Okay, it keeps getting good. Okay, so here we go, y'all. If you make in between $9,800, your earned income credit is $1,502. Okay, now keep in mind, I'm gonna go all the way down. Wow, I'm talking about wow. Okay, so between that amount I just told you a while ago, which was $9,800 and $11,650, you qualify for $1,502. It all depends on how much money you made for the year. So if it's in between that amount, that's how much that is. So with that being said, keep in mind you got that $1,600, right? Where my calculator? Guess I'm not gonna do it. You got that $1,600. That's your refund right now. And as long as you made in between 11,650, well, 9,000, I think it was 9,800, and to 11,650. Think you would get your 1,600 that they owe you back from the money that they've been holding from your check, plus 1,502, $1,502. So there you go. You got a refund of $3,102. Voila! Ain't that nice? Now the thing about the earned income credit, the more money you make, it starts to go down. So if you make $14,000, instead of getting that $1,502, you would get $1,133. Oh, if you make $14,900, you will get $995. And it just goes on and on. The more money you make, that earned income credit starts to decrease. Oh, it's nice this year. You would understand what I'm talking about if you were to look at the charts from the previous years. We're not going to go into those. So even if you make $20,800, you qualify for $93. That's not bad. All right. Now here it tells you out of there. Anything over $21,450, no earned income credit. The last amount is $21,350 to $21,400. You'll get $8. Okay. That's all I got on that. Okay. So with that being said, typically you would, this is good, y'all. Because before, I will show y'all something else. Okay, I'm gonna show y'all one little thing so y'all can end this video. I'm gonna just say this right quick. Thank you for your support and thank you for watching my videos. I just gotta show y'all this. Okay, so this video is technically over. I'm just gonna show y'all the comparison from a previous year. Okay, so prior to COVID, let's just say 2018. Back in 2018, if you didn't have any dependents, you couldn't make over $15,270. Now you can't make over $21,430 for you to qualify. Ain't that nice? 2019 went up then. Okay, let's look at 2016. 2016 it was 14,880. So let me show you the difference. Go to 2016. Like I said, $14,880. Where's my table? All right, y'all. I guess I won't be showing y'all this because I don't even see my table now. It's gonna bother me, so I'm gonna find it. Don't worry about it. Don't pay me no mind. I'm just all right. Okay, let's see. You know what? Nothing a good old Google won't do for me. Shoot, somebody gonna pull it up for me. Okay, let me see where we need to be. There go my table, y'all. Okay, I'm sorry. I just had to. All right. Now, remember I was telling you before for the 2016 tax year that the max for one person would be, the max you can make is $14,880, and the max with no qualifying children is $506. Right. Now we're at 1502. Ain't that great? Okay. So back then, in order for you to even qualify for the earned income credit, you had to make, if you made less than, if you made in between 14,800, and you made in between that amount, your earned income credit would have been the $4. Okay, so in order for you to get that whole $506, you would need to make in between $6,600 and $8,300. So whenever you went over that threshold, the earned income credit would go down. So anyways, I just said all of that just to say we've come a long way. That's all I can say. And that's it. All a refund is just the money that you've overpaid. It's nothing special. Please be careful. There's no such thing as maximizing. There's no such thing as maximizing. Just making sure that you put in the correct information, get your refund. So if it's just you, there's no such thing as, hey, give me the max. You got a W-2? But no, there's no such thing as that. You're only going to get what you put in. And if you qualify for the earned income credit, there's that extra money. And that's why typically we would do our 1040 EZs for free. That was great. Because I was like, hey, this is your money. I'm not doing anything special. The only thing I'm doing is just inputting your information, and voila, this is your money. This is your earned income credit. You work for this. But anyways, that's here or there. I hope y'all enjoyed this video. Hope I didn't confuse anyone. If I did, again, y'all have my number and you have my email. Just give me a call. Even if you are not my client, I don't mind answering a few questions here and there. Whatever I can do to help, I don't mind. So y'all have a great